Welcome to Kitchen Table Finance, the podcast where we serve up bite-sized pieces of financial advice to simplify your money and your life. Join your hosts, David Shotwell and Nick Nauta, and let's get started.
Hey, Dave, how you doing today?
I'm doing great, Nick. How are you?
Fantastic. Couldn't be more excited to jumpstart 2026. You know, this is my favorite episode of the year.
I was just going to say the same thing. This has become like the one I look forward to.
All right.
And more than anything. Yeah.
We make predictions and God laughs. Isn't that how
and we look like fools. That's which is the point, right?
Yeah, I think so.
Yeah.
The bolder, the better. The more, the bolder the predictions you make, the better. Because if one hits, next thing you're famous.
I think that is the theme. Looking back at last year's predictions compared to reality, we just weren't fired up enough.
Yeah, go big or go home, baby.
Yeah, that's right.
So I would be remiss if we didn't introduce the newest CFP here at Shotwell, Rutter, Baer, Mr. Cole Williams, who's been around for a while, but just earned his CFP designation. And so we thought, what a better exercise than making him do some predictions as well.
Yeah, thanks. Oh, go ahead. Sorry, Cole.
I'll say, thanks for having me, gents. I have a PDF on my laptop to prove it and everything. I'm a full-blown CFP. Very exciting. And I was under the impression that if I didn't bat 1,000 on all these predictions, that I'd be let go. Is that how this works?
Right. Okay. Well, at least some bonus should be at stake.
Okay, good.
That would be in keeping with the theme of how seriously we take predictions.
So, gentlemen, without further ado, let's take a look at how Dave and I scored last year. And Cole gets a pass on this one because he didn't get to make predictions.
I probably would have got them all right. So let's just assume that I drilled it. So
for sure. So last year we started out predicting the S&P 500 growth. Dave predicted a modest gain of 6,000.
To 6,000.
To 6,000, yes. Not 6,000. That would be very massive growth. And I forecasted slightly higher of 6,161. In actuality, the S&P 500 finished at 6,920 for an annual total return with dividends of about 17.9%. Blowing out our expectations, Dave at 2 and Nick at 4.5. So
I'd say we had the trajectory right. Well, I'd say we had the trajectory right, but I didn't even feel good predicting a gain last year.
No.
So I can't even pretend like spiritually we had it right. We just didn't go big enough. It was more like I didn't want to say negative, but I had very weak conviction that it would be an up market last year. I've got to admit. I'll own it.
Yeah, well, we didn't do great, but Wall Street in general, the major banks also didn't have a great year. The median forecast from most of the major banks and investment firms last year was 10 to 15%, so outperformed even Wall Street's expectation. Some of them being much more favorable. Oppenheimer actually had 20%.
Oppenheimer was pretty close,
Yeah, but most of them in the 10, 12% range, and quite a few 10% or lower.
Yeah.
So I guess take that for what it's worth. Right. None of us are good at this.
Right.
Another thing that we had predicted last year, Dave, was we both kind of agreed that small cap and international stocks were overdue for a resurgence, and we would see larger returns in 2025. The good news for you and I is part of that came true. We saw the MSCI World ex-US up 31.9% in 2025. Emerging markets up 33.6%. And world small cap companies up 34.1%. So we can pat ourselves on the back for that strong prediction, right?
Right. Well, that's kind of like the stopped clock prediction there, because I think I don't remember how far back on the podcast we've been saying it, but I've been saying international is going to have its turn since like 2015.
Right.
Yeah. So Anyway, it was good to finally be made right by the way we build portfolios and sticking with that international equity holding.
Well, that's kind of the ingest part of all this, right? We always kind of predict certain things in terms of on this podcast, but in reality, we're kind of playing all fields, right? We hold U.S. large cap stocks, we hold international stocks, we hold small companies, because the reality is none of us in this room, except for maybe Cole, know exactly what direction the market's going and where it's going to happen, right?
That's why you guys brought me on. So.
Right.
That's exactly it.
Yeah. He showed up. He had a cape and a crystal ball in his hand.
But the flip side of that is small cap U.S. stocks actually underperformed the S&P 500, with the Russell 2000 coming in at 12.8%. So we were not exactly accurate on that one, although 12.8% isn't a bad year.
No, it was a good year for just about everything. But yeah.
One of the other big predictions that we came up with last year was that we would see AI and tech companies moderate, with broader market sectors kind of overtaking them. And the reality was that the technology sector of the S&P 500 returns were 21.43%, so actually outperformed. Although in the later half of the year, we started to become much more correct.
Right. Yeah, it was brought back down to reality in a way. And when you compare like the trajectory between the tech sector and the S&P 500 over the last few years, this was much more in line. I guess, in general, you would kind of expect the tech part of the S&P 500 to outperform the whole S&P 500 overall, just because it's growthier, right. But so this is much more in line with what I would expect on average.
Sure.
Overall.
Yeah. And another key theme that we came up with for 2025 around economic growth, that, we're still optimistic of economic growth, not really any signs of recession last year, strong job numbers supporting market momentum. And in actuality, if we're going by GDP, the 2025 numbers were stronger than kind of our baseline projections, with about 3 to 4% GDP growth, although those final numbers aren't out yet. But the last couple of quarters were actually
interestingly, though, with an overall weaker jobs environment.
Right.
So, kind of an interesting mix last year with the way tariffs affected hiring and growth trajectory, and didn't affect growth trajectory, in ways that, early in the year, everybody was kind of fearing.
Right.
So, yeah.
Yeah, I believe that the whole tariff thing came out after our predictions.
It did. So timeline wise, right? We were not kind of the consensus, and I don't feel bad about falling into this camp, really, was that there had been a lot of rhetoric during the campaign regarding tariffs, but nobody really thought implementation, at least the rhetoric around implementation, would look like it did by like the end of first quarter, beginning of second quarter last year. Now, actual implementation and the talk about implementation turned out to be two different things. And that's part of why we did actually see the fears around tariffs not play out in the numbers quite as much.
Right. Yeah, and kind of going into that same theme, we predicted that, rates would stabilize and inflation would come back to trends, which we saw to some degree, but also it was a little bit more complicated, like you said, with the tariffs being thrown in there, of what actually happened with inflation and what happened with interest rates. We did get some interest rate cuts, but it, took a little longer than maybe it would have had we not had tariffs. Hard to say, right?
Right.
But it certainly played a role in kind of what happened with inflation and interest rates last year. We also had policy uncertainty leading to increased volatility, which I guess was spot on, right? In 2025, volatility measured by the VIX was 20.8, kind of in the middle of the year, which is relatively high. To give you some context, 2024 volatility was 15.6. The average VIX was 15.6. 2023, 16.9. So definitely an uptick in volatility. So yeah.
Yep. Yeah.
Nailed it.
We kind of expected that. Yeah.
Yeah. Yeah. And then kind of on to some of our fun predictions.
Oh, yeah. Our poor Detroit sports team.
We should probably stick to what we know, right? I predicted that it could finally be the year for the Detroit Lions to win it all. That went south quickly.
They did not make the playoffs.
They didn't make the playoffs, and they certainly
my beloved Red Wings
the Super Bowl last in January.
I thought Dylan Larkin was finally going to get to captain a playoff team last year. Did not happen. Looking
better for this year, though, right?
Yep. It looked good at this time last year, too. And, well, we'll get to our fun predictions here in a few minutes. But
needless to say, we did much better on our financial predictions than we did betting for sports. So, without further ado, now is time that we lock in our 2026 predictions.
Here we go.
All righty, here we go. S&P 500 return prediction for this year, Mr. Shotwell.
Let's see, we're at 6,900. I'm going to say 7,200.
7,200. Yeah. Modest gains. Mr. Williams, would you like to place a wager?
Oh,
it's only your career that's riding on it.
I actually had us coming in at about 7,400. So a little bit more optimistic than Mr. Shotwell, but not gangbusters, but a little bit more optimistic.
All right, I'm going contrarian this year. I looked at Wall Street. The major banks the median surveyed forecasts say 7,600, up 11,000. I'm going to go the opposite direction. Say we drop back down to 6,500.
Yeah, I'm kind of in the camp of making a modest growth prediction, but that is definitely in the cards from my point of view.
For sure. We shall see. I hope I'm wrong. I hope I'm very wrong.
Yeah.
It makes my job much easier when I'm wrong on these things on the downside.
Interesting, the range in what some of the major Wall Street firms are saying. We've got Oppenheimer calling for another 18% upside to the low 8,100 range. Deutsche Bank, Morgan Stanley, several others here in the high teens.
Yeah.
Bank of America is the lowest that at least it came up amongst the major banks at about a 4 to 5% gain.
Yeah, it's a wide range. Oppenheimer must be on the perma bull run because they were very high last year.
They were, well. Yeah. I did read something on this fall on predictions and Wall Street firms, and that basically. Kind of like me with my predictions, nobody really wants to be negative, but they usually traditionally have kind of underplayed what they really thought was going to happen because, in terms of marketing and it's okay to be wrong to the upside, or to, shoot low and over deliver. But if they told their clients, we're going to see 18% and they only saw 12%, everybody's disappointed, right?
Yeah.
So I thought that's interesting, the psychology behind some of this too.
For sure. All right, gentlemen, do you have a prediction on a specific market sector that you believe will outperform in 2026? Mr. Shotwell, what say you?
Oh, sector that will outperform? I'm going to go with healthcare.
Okay.
Are we talking specific sector of the S&P 500? Is that what we're saying?
Or just
asset class,
asset class sector.
Okay. Oh, all
right. Whatever you want to predict.
Yeah.
Well, I'll give you one of each. S&P 500 energy. I think that given that everybody and their mother is trying to open AI data centers, I think that there's going to be a massive need for all kinds of energy to power said data centers. And I think that even if the AI stocks start to slip, I think that there's just too much money invested in those centers, and they're going to keep trying to make those things run. And I do think, as far as asset class goes, I'm still thinking that there's a lot of room to run in the emerging markets / develop international world. We've had a lot of discussions about valuations, particularly how a lot of the S&P valuations are very lofty at the moment. And if markets are efficient, which we believe, the smart money is going to flow to where valuations are lower, seeking higher returns. So that's my rational answer to an irrational world.
Yeah. Can I go again, Nick?
Of course you can.
Okay, good.
You make as many predictions as you want. That's what we're here for.
Loud and strong.
Digging the hole, Dave. Just keep digging the hole.
So on the asset class side, I'm going to go with U.S. small caps.
Okay.
That, we saw gains, but relatively modest. And I'm basing that on kind of my own expectation of the tariff landscape. The small cap stocks, I think, were handicapped by the expectations of higher tariffs last year. And I kind of think that's going to ease a little bit. And then to what Cole was talking about with valuations, that's where we'll see, if we see some of that fear factor taken out, the valuations would justify some growth there. Yeah, that's what I'm going with.
Love it. I am going to agree with you on the small cap US. I think there's some pent up potential there for sure that we haven't quite realized yet. As far as S&P 500 sectors go, I don't have a great feeling about these, obviously, as I think the overall market might be down this year. But I will say, as far as relative, yes. But I do think materials and, hard goods, things like that, might do well in this environment. Just a gut feeling. No real reason behind it. Going with the gut this year, boys.
The gambler's fallacy in me was like, man, real estate's been getting hammered for like 5 years. It's probably due. But
right. Well, yeah. At least in the markets, the valuation differentials start to back that up after time, right? Are we on to underperforming sectors?
Yeah,
next?
We'll take the flip. We'll take the flip side. What do you think?
All right. So I'm going to go against Mr. Williams here and suggest that energy had such a big run last year in expectation of what the growth was going to, like, now they've got to make good on that. And I kind of feel the same way about the tech sector, that now's, as we've saw, and this isn't like going out on a limb because we've kind of seen this play out for the last couple of months, that all those expectations are now pushed to such high levels, they've got to start delivering. And back to why I chose healthcare as a potential growth sector this year, this is me going out on a limb. That's based on, okay, who's poised to maybe take advantage of AI more quickly than other sectors.
Sure.
So there you go. That's about as bold as I'm going to get.
I like that.
And I'm not buying anybody the U.S. healthcare sector in their portfolio, so don't even ask.
My underperformer, I actually did have real estate again. I don't think that there's enough things that have changed fundamentally in the real estate market in the short term to really change where we set. Obviously, interest rates are still kind of on the creep down, which is helpful for that. But it seems like a lot of the real estate sector is in things like REITs, which obviously are looking at commercial real estate. And it still just seems like there's not a whole lot of demand for commercial real estate writ large. There's been some companies that have really tried to push hard to, get people back to work and get people back in the office sort of thing. But I think that the Pandora's box has kind of been opened on that for a lot of people. And I think that firms that are willing to work out of more of a hybrid structure are probably going to be the ones that win in the long run there. So I think that real estate is going to continue to suffer until we find basically better, more efficient uses for things like commercial real estate. So.
Yes. Like transforming it into residential real estate or data centers.
Yeah, exactly.
My sector prediction for underperformance: financials, decreasing interest rate environment. Not always an easy one to kind of manage from a financial, and they've had a pretty strong run and probably, starting to take on some risk with some deregulation, and that usually means bad things maybe on the horizon. Might be too soon for that, but we'll see what shakes out in 2026 as far as asset class goes. I think there's a lot of tension in the emerging market world with all of the with all the geopolitical stuff going on. So it's just kind of the wild, wild west out there right now to some degree. So, I think to your point, Cole, of it doing well, I think it go either way. I think it's going to be one extreme or the other. So I guess we shall see. Do you gentlemen have an asset class prediction for underperformance?
Since I chose small caps to outperform, that would be at the expense of large caps. Whether we're talking if we're talking geography, yeah, I'd expect international and emerging markets should continue their trajectory that they're on. It'll be interesting because I think a lot of that has been on the backs, and I'm not smart enough to parse what is the valuation differential versus what is caused by currency weakness in the US dollar. These things all play into that. So it gets pretty complicated. But, kind of the thinking there would be a little bit of momentum market wise, that it's been a little bit pent up. There's been a lot of pent up demand there for international stocks from underperformance for so long. And the valuation differential will be interesting, but I would expect that outperformance would continue in 2026, just on momentum, if nothing else.
Mm-hmm.
I am going to do the super uninteresting continuation of U.S. large cap is eventually going to slow down. Strictly off of the fundamentals of, when valuations are high, we expect future returns to be lower. Valuations are very high and have been very high for a while now. So I just think that's in the same sense that people tend to not bet on the minus 800 favorite in the sports book because you don't get a whole lot of return on your money. People are going to be looking elsewhere to sink some funds. So
yeah,
there.
Yeah.
Love it.
Yep. Well, so there's going to be a tension between that idea and valuations, like versus stories, right?
Mm-hmm.
And AI's got the story on its side, and tech, that's what everybody's excited about and talking about. So be interesting to see that tension play out. I agree with you based on the fundamentals, for sure.
So now for some big important ones. I had to throw this one in for Cole. What do we think happens to Bitcoin and cryptos next year?
Well, so, Bitcoin and crypto writ large tend to be the first ones to get slaughtered. And when everybody regains all of their confidence, they tend to be the ones that can run pretty fast. So I think that a lot of it basically just depends on the market more broadly. Given the lowering interest rate environment, and that it seems like the administration is really doubling down on the low rates, high spending, trying to basically grow your way out of the federal deficit, things like that. It's hard for me to see this being the year that the whole thing slows down, shuts down, implodes, sort of thing. So I don't think that we're there quite yet. As a result, I think that Bitcoin's going to continue to creep. I don't see a massive year for Bitcoin. So it's at 91 today. I'm going to say Christmas of 2026, we're going to see it at 109. That's my guess.
109.
109 what? Tulip bulbs?
Yeah.
How do they denominate that now?
109
Beanie babies?
Yeah.
Sorry, couldn't help myself.
It's okay.
Would you like to throw a prediction into the mix there, Dave?
Prediction on Bitcoin?
Yeah.
No. No opinion.
You can say zero if you want.
Well, like, what's it worth, or what is it going to be trading at?
What's it going to be trading at?
Oh, I don't even know what it's trading at now. I have no idea.
91-ish.
91,000. 100 then. Okay. I think people will continue to buy it and push the price up.
I'm going to go 75.
Ooh. My man.
Yeah.
I dig it.
I'm trying to find Cole a buying opportunity.
Yeah. Right.
Here's a question for you that's been kind of circulating around the news. Should we take some of our projections and throw them on Polymarket and see if we can make some money? You want to explain what Polymarket is for our listeners, Cole? And
Polymarket, and the other big one is Kalshi, are regulated prediction markets, which is a fancy way of saying they will find you the other side of just about any sort of action you want to lay. Basically that. So they act as kind of the intermediary, kind of the escrow of funds sort of thing. And you and somebody in Uganda can bet on anything that you could ever imagine, essentially, between the two of you. Including U.S. foreign policy, elections, even. I sent you guys a thing that people were betting on the return of Christ this year. So there's a whole plethora of things that you can bet on if you so choose.
Oh yeah, it's kind of exploded, especially with the sports betting going gangbusters. It has kind of exploded as well in this kind of environment. It's been interesting on the political side. I think there's a lot of kind of useful insight into how people are betting on the political races versus what's happening kind of thing. So it's kind of this interesting social experiment of sorts. But I would caution anybody, just like sports betting, as these things become much more prevalent and accessible, they also become very dangerous.
Yeah. As
we've seen addictive behavior around sports betting. And this is just another kind of extension of potentially bad outcomes, right?
I sense a whole separate podcast episode on this, because there's some very interesting implications to having markets on these things. And, the first thing that comes to my mind are the analysis into things. Well, the best example is looking at NFL records in aggregate versus the spread,
right,
which basically is formed by people's betting habits.
Yep.
And last I saw it, and it's probably been a year or two, the record is basically almost dead even, 50-50 against the spread for the entire NFL.
Mm-hmm.
So that tells us, what I'm getting at there is that in crowds, there's wisdom, right?
Right.
In aggregate. Right. And which is also kind of the same theory behind the stock market, right? The price of GE is what it is today because that's what everybody's average of the buyers and the sellers is agreed upon.
Right.
And so starting to see these, so from that aspect, I think it's going to be interesting because it'll take some of the dumbness out of prediction episodes, right?
Yeah.
But on the other hand, I would not like to see people wagering on it any more than they do at the blackjack table.
Yeah. Please do not take any of our predictions.
I'd love to see the data. I don't want you to do it. Yeah. That's the way I would put it to somebody that asked me.
Yeah. Well, it gets interesting with that stuff too, because I feel like I read an article saying that the day before the Maduro raid, somebody had put an enormous amount of money on either Kalshi or Polymarket for that to happen, and I think they had made $400,000 or $500,000 or something like that.
Yes.
So it does open the door for obviously insider information, insider trading. If there's somebody at the Department of Defense that was a 20-something that had heard something, was like, you know what, I'm gonna it's a sure thing for me.
We've seen it blow up in the sports betting world with bad actors taking dives in games and whatnot too. So it's it's no surprise that you're seeing it in the political arena as well, potentially.
Yeah. All
right, gentlemen. What about your 2026 Super Bowl winner, Cole? Who you got? Who you taking this year?
Well, I did want to ask you guys. This is a real simple one. For the other predictions section of us, obviously we did Bitcoin. Do you guys think that by New Year's Eve 2026, the U.S. will own and or control Greenland?
Oh my goodness.
I hope not.
We should have started with that, because I think that like how we feel about that may change other predictions. I'm gonna go with good old Karl Rove from what he said about it yesterday in the Wall Street Journal, doing his own predictions in the editorial, that we will probably have a stronger military presence there after coming to some kind of agreement that does not blow up NATO. That's perfectly reasonable.
Nick, what do you got?
On Greenland?
Mm-hmm.
Trumpland.
Yeah.
All right.
I'm also leaning more and more Trumpland, just because it's been a weird thing that he's been talking about for years. Like between the tweets about the whole like Trump Tower on the ice shelf in Greenland and all the different stuff, I think it's something that he, for whatever reason, really wants and is really interested in. And I do think that Dave might be right. I think it might be more of like,
I hope Dave's right.
An increased military presence sort of thing, and maybe they're signing some sort of deal to lease bases with Denmark or something like that. But it seems like something that's the old commander in chief is really interested in. So
there is that.
Is that your answer for your 2026 Super Bowl winner?
I'm saying
the Commanders.
Yeah. But no, I'll jump right to Super Bowl too. So I did you one better. Winner of the AFC this year is going to be the Patriots. Winner of the NFC is going to be the Rams, and I got the Rams winning the Super Bowl.
I was going to take the Rams too.
Matt Stafford breaking hearts. I'm going Josh Allen and the Bills. Finally get over the hump.
What did a friend of mine called them the other day? The Detroit Rams. Justified.
All right, Stafford. Last one, gents. Better football record: Michigan State or Michigan, 2026.
Michigan.
I got Michigan better record in both football and basketball, with the Spartan caveat of Michigan State having a deeper run in March Madness.
Ooh,
interesting. I have no.
Izzo going back to the Final Four? Is that what you're laying down?
I could see that. He's not going to win it, but I could see him going to the Final Four again. That's kind of the standard operating procedure. So,
spoken like a true Sparty.
Yeah.
No opinion on the on either basketball team, but I would expect we're going to see a pretty good battle here for the Big Ten hockey championship between Michigan and Michigan State. Yeah. And I would not be surprised if they meet again in a couple weeks later in the NCAAs. Who will win? It's a push from my point of view, but it'll be some great college hockey.
Have they split thus far? They played twice, right?
Yeah, they played twice. They each won the away game so far.
Yeah,
so, love it.
And, I'm going to go on a limb too and say that this year, my prediction for my beloved Red Wings, they're going to go limping into the playoffs and get the last wild card spot, and they'll lose in the first round. I'll be that specific because they don't have the depth.
Hey, that's better than last year.
That's like by like one places. Win. They had won one more game last year. My prediction would have been right. Anyway.
I love it. All right, gentlemen, I appreciate you putting yourselves on a limb for us, making our predictions. We will check back in January of 2027 to see, and we will crown a champion of SRB predictions for 2026.
It might be my last day at SRB.
Right. Win or lose.
If our listeners have any questions or you'd like to make some predictions, shoot us an email at srbadvisors.com. We love hearing from you. We hope you enjoyed this episode and you stay tuned. We have a great lineup headed out for 2026 from the podcast. So we're happy to have you along and looking forward to some good stuff this year. Thanks, guys.
Thank you.
Thank you for joining us for another chat about your retirement and finances. Please hit that subscribe button. You can also contact us at srbadvisors.com or email us at info@srbadvisors.com. See you next time on Kitchen Table Finance.